Joining me now at the Investing in African Mining Indaba 2015 is Geoffrey Qhena, and he's of course CEO of the IDC. Thanks so much, Geoffrey, for your time today. So part of the Indaba's objective is to showcase Africa's mining sector and the investment opportunities that lie within it. What's your sense of the opportunity right now?
My sense is there's lots of opportunities. We know there's infrastructure that goes with that. So, and that's why maybe the exploration has not happened to the level it has. I do understand that it's at the time where some of the commodities are low, but the mining by its nature is a long-term investment, and I think those opportunities are still there. I think the number of people that I see here and the optimism does indeed confirm that Africa is still a place to invest in.
Perhaps those low commodity prices presenting even more prevalent opportunities within the mining space. To what extent does the distress that some companies face amidst those falling commodity prices and rising costs fuel a pipeline for you?
Well, they do fuel a pipeline for us. But I think when they only export with little processing, it makes it a little bit less competitive for them. I think this provides an opportunity for us to look at opportunities to value add, which is something as the IDC would like to do, extract those minerals, value add as much as possible, so that then we can be able to create more employment, but also not just employment, the type of skills that you would find ordinarily in value adding.
Okay, so let's get into some detail on that. Where exactly are you putting capital to work and how much?
Well, for the next 5 years, as I'm sure you've seen, our shareholder said he's stretching us. We need to put in about 100 billion over 5 years. It's something that we've accepted. That investment will not only be in South Africa, but the rest of the continent. Industrial infrastructure is one such area. But also on the renewable side, we know it's an opportunity for us to be able to do that. But also when we look one particular commodity which we'd want to continue to support is on the coal side, particularly bringing in some of those miners who would ordinarily not find it easier to come in because it's a long term. So we want to do that to support two things. One, Eskom, as it rolls its power stations. I think it's important that we play that role. But also on some of the minerals that you'd need some of the coal. So we know South Africa does not have coking coal, but there's opportunities elsewhere here.
Okay, I asked about the capital you're putting to work because you're adamant that you're not selling any of your holdings in the listed companies you do hold to alleviate some of Eskom's pressure. Those assets worth about, what, 4 billion rand? Why would it put the capital spend you've outlined at risk?
What we're doing, as I said, if we're looking at the opportunities, like for an example, ensuring that we finance people who would be able to extract coal so that they can support Eskom, we think that's probably a better way of supporting Eskom. But also we have to look also on the transmission side. I mean, we will be talking to them. There will be opportunities to say, is there a way? But if you look back, we've also made commitments on the renewable side. And a number of those are starting to come in and to connect into the grid. And we know there's also an opportunity for which the government is looking at to encourage other independent power producers to produce electricity as well. I think that's an opportunity for us, which we think it will probably be best spent.
How soon do you see those opportunities viably coming online and helping alleviate the crisis that the country is facing right now?
On the renewable side, the ones that have gone on round 1 and 2, most of them are coming on stream. For round 3, there still has to be construction, so that's still maybe 2 to 3 years. Now the independent power producers on other forms of energy, that will take a little bit long, but it's a long-term investment. The other part of the business that we're doing is we're looking at on the energy efficiency. I think that's an opportunity for us to do that. We're doing it with some of the partners, and I think those are some of the things that we should be fast-tracking to ensure that we assist.
Part of your role is to stimulate the economy by starting new industries. You've alluded to all of that right now. To what extent does the power crisis put that objective that you've got at risk?
Well, when you start some of these and there's no certainty that you'll have sustainable power, it will affect that, which is why we also wanting to be part of the solution. So, but we are part of the solution in two fronts. We're saying let's help generate the energy, whilst at the same time not forgetting what we are established to do, to promote sustainable industrial development, which is why we're doing that. We say you can't sacrifice one to the exclusion of the other.
So for now, Sasol, Kumba, Sappi, ArcelorMittal, Life Healthcare, Hulamin, Merafe and BHP, all safe within your portfolio of assets?
When you say all safe, I'm not sure what you mean, but I think what is important is we have a business model, and we're not saying we're trapped into it. We've got commitments which we have to satisfy. I mean, as we speak now, it's close to 28 billion worth of commitments. There are some of those investment decisions that we've made in the past. We need to honor those commitments, and that's how this business model is going to be ensure that it's sustaining going forward. I think the faster we get some of those returns, the more we can put in even more into the economy.
Let's leave it there, Geoffrey. Always a pleasure. Thanks so much for your time today.
Thank you.
Of course, Geoffrey Qhena is the CEO of the IDC.